Hello, everybody. You know, I've been doing some thinking lately after I had a discussion with some of my friends at a restaurant. And then, as I tried to convince them about the potential of stock investing, the gains embedded in the asset class, a reasonable number of them do not have a clue about what I'm talking about. So, I decided to produce this video and then explain in details what stock investing is all about. Please note, I'm just your regular guy and not a financial analyst. This video is for financial education purposes. Welcome to my channel. What is a stock? Well, it is an investment that you own by buying a share from the company that issued the stock. And for companies, stock market provide them with an opportunity to raise money by issuing shares to investors. Meaning, if and when you own or you buy a share, you own a fraction of that company. Hence, you become a shareholder. And the question people often ask is why stock and not a bank? In my response, I always provide them with simple answer. Money invested in stock market has the potential to grow quicker than if you keep it in your savings account. And with stocks, you make money as your investment appreciates, or capital gains if you like. And then you will collect regular payment known as dividend. Again, the dividend will compound over the years if and when you reinvest it. Okay, perhaps you don't know how dividend works. In that case, please check my video titled Dividend Stocks Review. You will see it at the end of this clip. And to buttress my point, let me say, please listen to warning. And I quote, "Stocks are still the best of all poor alternatives in an era of inflation," end quote. Okay, that said, why are stock investors still missing out and not profiting from stock market? I think this is a good question to ask. Well, let me try and break it or explain as much as I could. To start with, investors should be aware that stocks are often classified as growth stocks and income stocks. Tech companies are growth stocks because their stock price appreciates quicker, like Facebook, Alphabet, or Twitter. These companies prefer to reinvest any money realized back into the company for further growth and expansion. While income stocks are companies that pay their shareholder quarterly, semi-annually, and annually from the profits realized in the form of dividend. The likes of Coca-Cola, Johnson & Johnson, and P&G, etc. However, you should bear in mind that growth stocks has the potential to increase in value. Meanwhile, they are very volatile. While income stocks do pay consistent dividend, however, may not appreciate quickly. Again, you probably want to ask me, what is the best way out? Well, in my opinion, you should have both growth stocks and then income stocks in your portfolio. Well, again, according to my experience. As an intelligent investor, it is a good investment strategy to choose your stocks and build your portfolio after you have examined the company fundamentals. Okay, I think you should be asking me, what do I mean? Well, stay with me. You should analyze the company fundamentals like the balance sheet, income statement, debt, and the intrinsic value of the company. And I will also suggest a technical analysis as well. To know more, check my video titled How to Evaluate and Pick Valuable Stocks. You will see it at the end of this clip. And this is very interesting. Please listen to this. Hear me out. In the recent development, there is a paradigm shift in the way some investors evaluate a company. Some investors strongly believe in speculative analysis. A good example is Nikola, Neo, and even Tesla. You see, investors see a good potential in this type of companies without necessarily considering the company fundamentals. Well, the question is this method sustainable? Well, in my opinion, time will tell. However, so far it's been very promising. More to come. Please listen to this. This is very interesting. While some investors speculate, they do speculate, it is worth to state again that you must consider the stock intrinsic value. Okay, I know you would like to ask me the relevance or the importance of this concept. Well, intrinsic value gives you a clear picture of the status of a company. It will tell you if a particular stock is undervalued or overvalued. Again, as an intelligent investor, you should aim to buy a stock when or if it is undervalued. Please wait, let me break it down. Okay, let me define what is intrinsic value for you. And I quote, "It is the discounted value of the cash that can be taken out of a business during its remaining life." End quote. And this concept offers a logical approach to evaluating quality investment and businesses. So, the question you likely want to ask, how do you calculate intrinsic value? Well, there are several ways of calculating it. However, in this video, I will focus and summarizes Warren Buffett method. According to him, it's all about future cash flow. What do I mean? Look at the balance sheet. Look at the projected future cash flow. Then you must discount the cash flow to the present day figure. And then again, you should be able to understand the business moat. Is it got a wide competitive advantage? And then from all the figures you've seen so far, get a ballpark figure. Not an exact figure though, a kind of rough estimate. Then you should focus on stocks that have stable information, where you can get information about the income balance statement, what they've been doing for the past years. Meanwhile, watch out for another video which will cover intrinsic value calculation in details. However, the market crash of first and second quarter of 2020 revealed that the stock market cannot and should not always be regarded as the leading indicator of the economy. Again, this is very revealing, even to me. What do I mean? Let me explain. Before the crash, the general consensus is thus: For the stock market to appreciate, the economy must do well. And if and when the economy is down, the stock market will also depreciate. Well, it is not usually the case. The recent past event in 2020 is a good example. While the stock market was up to say about 40 to 45%, the US economy was in bad shape. Companies closed down with several numbers of people without job. Though one may argue that the Federal Reserve policy to inject money into the economy is a great stimulus, or quantitative easing if you like, which contributed to the stock growth performance. Again, this is very interesting. Some experts have warned investors not to watch and listen to financial news because they believe the information this channel news broadcast is very misleading. However, I have a contrary opinion to their views. I will watch and listen to the news and pick the grain from the shaft and carry out my research and make investment decisions based on the company fundamentals. Again, it is very important to let you know and realize that stock market is not immune to crashes. The stock market will experience bear market once in every 8 to 9 years, which is called pullback. Okay, let's have a look at this. From what we see here, there's a pullback in 1929 crash, and during the crash, Great Depression, all along, it's been down, up, due to depression. And again, we have the Black Monday. So, what am I trying to say here? Despite the pullback, the stock market will always go up. Again, the recent market crash in the first and second quarter 2020, in my opinion, is a long awaited correction because the market is bullish overextended. Remember, like I said, the stock market moves in impulsive and corrective pattern. So the retracement is a very good sign for the market to avoid the bubble. Okay. However, the good news is thus: the stock market will eventually goes up in the long term. According to research, the stock market has been up 91% of the time, meaning only goes down by 9%. And this is my advice for new investors. I mean, some of the people I met at the restaurant. Financial education is not a luxury, rather a necessity. You must invest in yourself. And while you are updating and upgrading your stock investment skills, you should not miss out. Invest in ETFs and index funds. And to invest in these asset classes is very simple. Check my video titled Index Fund for Beginners. You will see it at the end of this clip. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.